The Crotchety Old Men podcast is not a registered investment, legal, or tax advisor or a broker-dealer. All investment financial opinions expressed by or on the Crotchety Old Men podcast are from the personal research and experience of the owner of the site and are intended as educational material. Although best efforts are made to ensure that all information is accurate and up to date, occasionally unintended errors and misprints may occur. Before you invest or make any investment-based decisions, consider your own personal circumstances. You should do your own research and seek advice from a financial professional.
Hello, and welcome to another episode of the Crotchety Old Men podcast. Hi, I'm your host, Gary Smith, and joining me in the studio, of course, today is George Crumley. George, what are we talking about today?
Hey, Gary, we're talking about life in general, and you can't have a great life if you're not wealthy, you're not healthy, and you're not strong. So we're going to talk about maybe not in that order, but we're going to talk about a little wealth today.
All
So I
right,
think that's going to be a good subject for us.
absolutely. Well, George, when all that's going on in the world today and people are wondering about how or where to put their money, okay, and outside of the equities and things of that nature, we're a proponent of hard assets. And so, how about we talk about precious metals today?
And it sounds like a great subject. One of the things we always talk about, if you go back and listen at some of our earlier podcasts, we always talk about diversification of assets. And I think that, we've talked about real estate, we've talked about the stock market, but I think precious metals is something we may have overlooked. So overlook no further, okay? Because today we've got Andre Osborne on, who's from the Alex Lexington Precious Metals, and he's going to here today and talk to us and educate us on precious metals. Welcome to the show.
Thank you for having me. I'm excited to be here, and hopefully we can help some people have a little more knowledge than they have before.
Oh, absolutely. So come on, Andre, tell us a little bit more about yourself and tell us a little bit about the business. How'd you get started in this?
Well, I actually married into this situation. My father-in-law had been in the industry since the 70s. He started in the diamonds industry on 47th Street, which is like the epicenter of jewelry in the United States. In the 70s, he got into gold in the 80s. He, his brother, and his uncle have been doing it. And my wife and I thought it was a good idea to join with him. He said he wanted to retire. And here we are, 14 years later. We've adjusted with the markets and the demands of our industry. I specialize in the coins and bullion aspect of our business. My wife specializes in the jewelry and diamond space of our business, but I'm here to talk about some precious metals. We do buy and sell precious metals in any form, but for investment purposes, coins and bullion are a standard platform or format that people trade more than people would know, because most people don't talk about it in a very public platform.
Okay. So as the operations manager for Alex Lexington, I want to make sure I get that name right here,
That's
located
correct.
here in Atlanta.
Mm-hmm.
Tell me how precious metals you can use that in diversifying your portfolio.
I'll use an example that people are familiar with. I don't know if you've been following the financial news with SVB, Silicon Valley Bank. The FDIC is coming right in now to the terminology being used as backstop the banking system or your deposits with the bank. Imagine this goal as a backstop for your finances. It's not necessarily the vehicle that's going to get you rich. You can make some significant gains with it, but it's not going to get you rich. It's more like the rainy day fund. And the reason why it's maybe not as popular as other asset classes is because no one's going to tell you that they have a bunch of gold or silver sitting in their basement or their safe. It's sometimes a very private matter. It depends on what culture you come from. Non-US cultures, it is the primary source of savings for them, as opposed to American culture, which we have a little more faith in the banking system. than other people do because they've seen a little, a couple more things than we have, I think. So
That's good. That's good. I'm believing that faith is probably going to wane away after a while. They're talking about the American banking system, but
mhm.
I want to explore this precious metals just a tad bit. You kind of mentioned gold and silver, but are there other precious metals that would warrant one putting into their investment portfolio, or is more concentration primarily on the gold and silver?
So gold and silver are the primary players. There are the family of precious metals include gold, silver, platinum, palladium, and rhodium. Palladium and rhodium, though, I generally say or recommend for people that are extremely comfortable, extremely liquid, because it is predicated a lot on the automotive industry. So catalytic converters, people always hear, oh, someone's trying to take my catalytic converter. They're going for the metal, which trades significantly. The palladium metal trades significantly higher than gold. And platinum used to be the go-to, but now it's palladium. And rhodium is something like $20,000 an ounce. So it's very expensive and hard to acquire. So gold is a little bit easier to acquire if that's could be said, even though gold is scarce in some capacity.
Okay. So help me walk me through, how a transaction would actually, take place. Because look at something traditional as far as if I'm going to buy stocks, I can do it all online. I can, talk about the closing price, what price I want to get in, just the regular process. But when we talk about gold and silver and other precious metals, I'm completely at loss. I don't know how to even start. So how would you start if you want to get
Okay,
involved in something like that? And what does that look like?
so everyone's goal is a little different. It depends on. We like to say, what kind of wealth do you have already, or have you acquired? Some people can build through precious metals. The process is actually pretty simple. We would sit down with the customer, discuss, their net worth, if they know what that number is, what their goal is. Then you can say, okay, I would like to acquire the metal physically. Is generally how we do with a lot of our clients, and we figure a number. It might be a dollar amount, or it might be a quantity based on ounces. The ticker you see on the television on the bottom, or you look up precious metals pricing, the ticker you see is going to be the price per ounce. So we figure a number that you feel you either want to work toward or you want to acquire in the moment, and we agree on a price. Then you make your payment, and then you can either, we generally deliver to clients, or they can pick it up from our location in Atlanta.
Okay, that's interesting.
And there's a third option. Sorry, there is a third option. The third option is we do what's called allocated storage. That's generally for higher end purchases, but we have the capability to store your metal in a level 3 vault. It's probably in only a handful of locations in the United States, one in Canada, and I think we have a Virgin Island location that we have access to, that we broker, and your metal is stored there as well.
Okay, so for an investor, the three phases. I think you believe it's from years 20 to 40 in your accumulation stage,
Hmm.
and then you get into your allocations. And then in your latter stage of investment cycle, you're more into a preservation mode. And so I'm going to focus on gold right now. With
Hmm.
gold being a type of real asset, if you will, while it does not produce any income, at what phase during one's investment cycle do you recommend for people to get involved in gold?
It depends on how bullish you are.
Okay.
Some people are all in on, they're called gold bugs. They're all in. I'm not a advocate of being all in on any one asset in general in life. I believe in diversity. So For example, if you are in tech. So to answer your question specifically, it depends on the person. Some people are more bullish than others. Once you have, let's say, acquired a lot of your wealth, a lot of people, they do it in the middle to end because they've acquired the wealth. Now they're trying to retain that wealth. And the best way to retain it is something that is going to have minimal risk, um, great hedge against inflation, steady growth. And that's generally what people are looking for. People don't realize, I say sometimes gold isn't sexy, but it is sexy because it doesn't give you that rapid growth like a tech stock might. But if you're at a middle to later stage, you don't want to lose any money. You wouldn't want to, let's say, invest in crypto. Crypto is extremely volatile. Gold and silver are extremely stable. Stability, if when you get to that middle to later stage, stability is your goal. Stability and consistency are going to get you where you want to be, and there is no magic to it. It's just going to keep growing. There are also ups and downs to it, like anything else, but it's consistently grown since biblical times.
So, can you use the traditional dollar cost averaging with gold and purchasing gold or any of the other precious metals?
Yeah, so there are a number of strategies that people use. Some people go based on the gold to silver ratio of the market. They may want to say, okay, I see gold and silver have, they're on such and such a parity, and we predict that the parity is going to come closer. So since it's going to come closer, for example, a lot of people are buying silver because they feel that silver is an undervalued asset. So long term, they feel silver has a greater potential, and I want to put a lot of money in that because I feel that it's going to come up to where gold is and give me a better return, than something else might. Did I answer your question correctly? I don't know, because there are different strategies based on different schools of thought.
Well, what I was getting at was that's one of the things that we talk to our audience about is, taking advantage of, the market or what they're going to invest in by doing dollar cost averaging, because that way you're able to take advantage of the pricing as it goes up and down. Obviously, the theory is
Oh,
once the price goes
yes, I'm
down,
sorry.
you can buy more, price goes up, you're still buying some. And then overall, once the price goes up, you have more shares. So I'm just from a uh, investing perspective, dollar cost averaging is that a method that you can use with gold
Yes, it
or
is.
silver?
So, sorry, yeah. So the answer is yes. A lot of our clients do that as well. If you want to do, you know, and that is helps with consistency. So I could say there's no everybody wants to get it at the bottom, and that's not always a possibility. You could do it, but like you said, the dollar cost averaging is a great strategy that people use. Consistency is the key. What I tell a lot of customers. Like I said, if your strategy is I want to get to a certain dollar amount, then the dollar cost averaging is the best option because you don't necessarily, let's say you bought gold at 2,000 and gold comes down $100 and you're buying it down, your dollar cost average is going to come down, and you're in a better position. And then you hit a certain point where you're like, okay, I'm not going to be buying anymore because I may not be working, and now I'm at the part of my financial career, as we can call it, where I'm just trying to just ride the market out, and I liquidate as I need. So that's one of the benefits of using that strategy, the dollar cost averaging.
Okay, for the layperson, dollar cost averaging is almost like putting it on layaway, right? You pay a little bit at a time so that you're able to buy the whole ounce. Correct me if I'm
Mm.
wrong here, but gold being about 20,000 for the 2060 or whatever it
Hmm.
was, it closed that last night. So if my goal is, and you put it into a dollars and cents scenario, if my goal is to amass, let's say, $100,000 worth of gold, um, so obviously, if I buy 50 ounces, that's going to get me to that 100,000.
Hmm.
Now, and to George's point, now if that gold goes down $100 or what have you, now I'm at a loss. And so the strategy becomes now, because I understand that gold is nowhere near as volatile, I guess, as the other markets, the equities and your ETFs and your index
Hmm.
funds and things like that. But because of that lack of volatility, how does one strategy shift now, and from a dollar cost averaging perspective? Just because I buy that 100, that next bar of gold for 1900, is there any gauge on how? I mean, I'm kind of lost
All
in
right.
this.
So markets have a feel. You can
Okay.
look at the historic charts of markets and say, okay, it's been here. Um, right now, we are in a channel between the. I'm going to use the pen. So there are places in the market that kind of stand out. 2008 is one for a lot of people. For us, it was 2014. Gold hit $2,000 an ounce. I'm going to use the pandemic as the most recent governor, as a point of inflection where gold jumped significantly. So right now we're in a channel with this new financial situation that we're dealing with globally, that we're at the beginning of another frontier, as I like to call it. I don't see it dropping significantly at any point right now. $100 in gold is not a lot of money. It may seem like it in the moment, but if gold drops $100 right now, you're really just in a channel. Right now, we're at a new frontier where we're talking about gold being $2,500 an ounce. And my wife and I were just talking about it yesterday. The reality is, when we got in this industry 14 years ago, gold was $900 to $1,000 an ounce. And when my father-in-law got in the business, gold was about $200 an ounce. So you can see the relevance of time periods, why I'm saying confidently that I feel we're at the beginning of a next frontier. And looking at the history of where money has been, the Fed printed the money. That is, there's no getting around there. There's no political affiliation, there's no team, or what you believe. The money was printed. Most of the money that was ever printed in society was printed over the last couple of years. So the bill has to come due. So since the bill's going to come due, the reality is going to be, I expect inflation to keep going up, and I expect the price of gold to keep going up. I'm not going to give you a number as to how much, at what rate, but up is where it has to go, because the money was printed and the bill was made, and it has to come being paid. So I would be confident to say we're at the beginning of a current frontier where gold goes up from here, or precious metals in general. Does that accurately
Oh yeah.
get you where you're going?
Oh, that helps me a lot, and because I wanted to put that out there for our listeners so that they can see that, hey, as you in your financial planning, if you will, or your investment strategy, is that, and you nailed it, gold, because of inflation. I mean, a rising ship rising tide lifts all ships, right? Inflation is
Correct.
something that does that. And so gold is that commodity that I can see why that, yeah, the downside is that, yeah, it does not pay a dividend, does not pay a return or interest, I should say. But however, that does not negate the value of gold in your portfolio, in your investment portfolio, because just to your point, as gold continues to increase in value, well, there's where you have a real hard asset. That whereas that paper printing scenario there, that's going to go away, and this whole financial system, and we're headed that way, as where it's going to either lapse or it's going to have to revert back to the gold standard, okay, of the dollar being backed by gold, and gold right now, just by the information that I've read and educated myself on. We're so happy that you're on our show today, that you're able to share with us and our listeners the importance of balancing that investment portfolio with gold, because there's going to come a time that you're going to really be thankful that you did. All right. See, thankful that you, as a matter of fact, there's going to come a time when you're glad that you bought some and you wish you had bought more. That's what my, that's
I have a lot of customers, you'd be surprised, that come to me and said, "Man, I'm glad I made that decision." They were very unsure when they did it because, unlike a stock market, it it does come back. So when a share of a company goes down, a lot of times you're like, will they recover? Gold is always going to recover because that's what our central banking system backs their money with. People don't know this, but the central bank has almost doubled. Like they've been buying, I think, like over 100% of gold for their reserves. Something else pertinent to the global economy that people also, I don't know if people are aware, but our experience with Russia and different countries out there, they're coercing together to put their money being backed by gold, and that's not a. I like to make the statement that's not a political affiliation. That's just hard facts. So if the other team is doing it and our central banking system is doing it, why isn't it good enough for you to be aware of the situation?
All good information. Let's kind of shift gears just a little bit. I
Okay.
know, speaking from my perspective, and I'm sure you guys can possibly chime in on this, but I'm sure a lot of our listeners can also chime in for this. As we know, throughout the years, our parents have given us a little bag of dimes, nickels, Kennedy half a dollars, and all basically silver coins. I know I've got a little bag of it, that I've collected. And you always wonder, what you should do with this. So let's talk a little bit about silver. Is there value in these coins that we may possess?
So yes, there is. They are worth more than face value, as I like to say. A dime is not just a dime. A quarter is not just a quarter. Anything 1964 and older that are dimes, quarters, and 50-cent pieces are worth more than face value. It's very easy to tell. You turn the coin on its side. If you can see copper, I like to say you can spend it. If it looks like silver, it is, and it's worth more than face value. Can I give you a story real quick? Okay, so a story that I have is a client of ours. The father had passed and apparently didn't inform their kids, which are in their 50s, that, hey, there's some silver in the house. They had closed out the house. They were going to sell, and they thought they cleaned everything out. They go in the garage and they're moving paint cans. They go to pick up a paint can and it's like heavy, real heavy. Open the paint can, it's full to the brim with, I believe it was $50. They had about they had two paint cans full, and let's just say when I cut them a check, they could have bought a car, and that's one of the or two out of the other paint cans that they had I think silver dollars in them. So silver dollars also, they're called Morgan and Peace dollars. You can look these up. Some have significantly more value than they look like, but for the most part, the circulated ones, they have a good return as well. And we still buy and sell all these items every day here,
I guess the
and they're very
moral to that
profitable.
is for our listeners out there, if you've got some of those silver coins laying around, you better rethink your positioning on those. They might not be something you want to maybe just go out and,
Don't go
buy
spend it.
something with. You want to hold on.
Yes.
Well, that's good to hear. That's good to hear. So let's talk a little bit about, it's interesting, as I listen here, because as we've talked, as we do these podcasts, we learn things also. And interesting enough, we scheduled you to be on the podcast prior to all this banking
Mm.
situations that have come up. So, I think this is very, very timely. But let's talk about, precious metals from a positioning perspective. What are some of the challenges, because, like I said, I've been an investor for a long time. I'm sure I've seen gold advertisements and silver advertisement in different magazines, and I've had professional help in looking at investing, but I've really never had anyone approach me and say, this is why you should buy precious metals. So let's talk about some of the challenges that you see in as far as why this is not a commonly investable tool or vest
Well,
in?
so the number one reason why it's not popular by the banking system. So, by the way, back in the 70s, you could go into a bank and purchase your precious metals from the bank themselves directly for information. So, wealth management became a very lucrative business in recent years. The reason why it's very unpopular by wealth managers is there are no residual returns. You do the transaction, there is no return for them. There's no financial benefit from a system from the system to have you be financially independent in that regard. So the only time you're going to deal with a person that's going to make a financial gain is when you buy it and when you sell it. So there's no residual fees, there's no residual payments. That's the number one reason why it's unpopular by the banking system. Now, the same reason why it's unpopular is the same reason why it should be popular for you, because now you are financially independent to make the financial decisions on your own. You make the purchase, you watch it grow. Um, Storage is the number one thing that people ask about. And if you're making a significant amount of money, chances are you have a secure home. So you can store metal securely in your home. One of the things I tell people is if you have a significant amount of metal, let's say silver specifically, no one's going to be running away with it. We had a client sell 1,000-ounce bar that they purchased, or I'm sorry, the father had purchased from the U.S. Treasury themselves directly back in I think the 70s. Silver was like $1 and change an ounce, and the bar was like 70 pounds. No one's running with a 70-pound brick of anything. I don't care how fit you are. So, you know, it's one of those things where if you have a secure location, your home is probably secure. You can be your own bank essentially. Most people they store it in their home in a safe, or they'll have a safety deposit box with the bank. Or another option is, of course, allocated storage, with is a insured location. There are designated places around the country that provide that service for a fee, of course, but we can do that for you as well if you're interested.
Man, let me tell you something. I went to your website last night, sharing with my wife, and I saw you guys melting down this gold earrings, and lady taking her earrings and all. And so I said, you know what? You got a lot of gold earrings and bracelets and stuff. Why about we just melt some of this down to a bar of gold? And man, that's why my eye is still sore now because she slapped me.
Man.
So, what do you, so what do you do for a situation like that, man? Because I see your point, but man, I can only see out of one eye now because my wife didn't like that
So
idea.
I got a funny story for you. I had a gentleman came in. This is when gold was going to 2000, the last go round back in 2014. Gentleman came in with his wife, arms crossed, not very happy. He's there saying, "Man, I told my wife to sell this stuff." He has a shoebox full of stuff. Been telling his wife to sell this stuff. He told her that he was gonna throw it out, literally throw it out. We cashed them out. They were going to be going to Europe, I believe, and they could have bought. Let's say they could have bought two first class tickets with what we had to return for them. Significantly enough that he showed up a week later to liquidate some of his own stuff. So don't be too sure that she'll be unhappy when she sees a return from you.
All right, I'm going to take that advice. And if she kicks me out of the house, what's
So,
your address again?
well, listen, I got a couch, real
Okay.
comfortable. Or what you could do is liquidate something and, as we like to say, indulge. We have what I like to call the investment side and the indulgence side. You
Right.
invest on one side, make a return, and then you indulge, and then you go see my wife on the other side, and she can make her something real nice. So
All right.
we can, cut it both ways as well.
All right. I like that.
So I got a question based on that. So if you do have, a bunch of old rings, settings, earrings, and you are thinking about that. Does that make sense to bring it in, have it melted down into a one solid piece and then keep it like that? Or does it make sense to keep it in the format that it's in?
I would say if you're not wearing it, keep it for the that it's in. Now, if let's say you inherited it, I think it depends on what kind of situation you're in. Let's say you inherited a bunch of jewelry. Chances are the person's not going to be wearing it. In that case, I would say liquidate it, get it into the form of something that is a little more transferable, coins, bullion. I've had people do that as well. We do a lot of estate assessments, and somebody inherited a bunch of items, grandmas, great grandmothers, whatever it may be. We come in, they sell it. We in turn provide them with the precious metals. That's a medium that anybody can use, and you're happy. So both are an option. It just depends on your scenario. If something that you purchased, chances are it was bought in a time period that gold might have been significantly lower. So that might be a viable option for you. But I don't say that for people that have bought past, I'd say the 2000s. If you bought gold in the 2000s where gold was close to the price right now, then I would not say that's a good option. I would say keep it in the form that it's in, to give you a long answer.
Andre, would you consider or agree with the fact that, because I know in the earlier stage, earlier part of the podcast, you mentioned about gold coins
Mhm.
and my question now becomes, would that be somewhat of an entry level area to purchase or invest in gold coins and then work your way up to gold bars? Or
So coins and bars are just a form. Coins are generally going to be produced by a government. Bars are generally going to be produced by an organization or private mint, as we call them. So the coins generally have a higher premium. The bars generally have a lower premium, and people just have different preferences. Our money, believe it or not, the U.S. Treasury still produces coins and coins every year, and they're actually the highest demand items out there. So that's just information. The form is not the significance. Um, it's just your preference, really.
okay, all right. Well, as I'm looking at the clock and it's getting time for us to wrap up, but I want to give you the opportunity to share with our audience how might they find you, and you know how can people get more information about the about gold, about precious metals, period.
So very simply, alexlexington.com. You can come on our website, fill out a online form, and set up an arrangement for a consult. That's something that we encourage everyone to do. Even if you just find out that this is a plan that I want to work toward, or I would like to purchase, or I would like to sell, alexlexington.com. If you want education, we have a media network that we're really working on building, the alexlexingtonnetwork.com, and you can find content and information that will educate you. We would like as many people to be educated to make their own financial decisions and be financially independent. At the end of the day, we provide that information, and we just don't limit it to precious metals. So you'll find something educational as much as we can. We try to provide that value, as we like to say, to our customers. Oh, and lastly, we have a custom jewelry division, which is Alex Lexington Diamonds, which we provide great custom jewelry um, at fair pricing and high quality product.
Man, this has been great. Very informative. I know I've learned a lot. And with you being here in the city, I'm definitely going to come over and see you, sit down with you, and give me some insight as to, how I can get involved in this. It sounds like something, like I said, the diversification is something that we're always looking for. And, as we
Mm-hmm.
continue to try to build a legacy for our children, it's hard assets, real estate. And here now I can say precious metals. Those are the things that you can be ensured that are going to be passable to our children. So learned a lot here today.
Can I leave you on one? I'm big on stories. Can I leave you with one story?
Absolutely.
All right.
Absolutely.
So I have a gentleman who is a retired teacher. So I like to give these stories because it gives perspective to people to think it's not far off. It's not somebody else. You don't have to have a ton of money. Um, he was consistent, and he bought silver when it was about $6 an ounce back in the 90s. When we met him, it's been 4 years now. We've seen him twice a year for 4 years. He's been paying for his grandkids' college tuition. Now, I don't know about you, but I know how much college tuition costs. I've got two little ones, and he's been cutting some significant checks. He bought at $6, and he's been selling at around $22 to $25 an ounce. So that's the power of investing. And the 90s was not that long ago. So it's something that you can have a good return on your investment and can do very well for you. So I hope that helps somebody today.
Absolutely. Absolutely. Here again, we thank you, for coming on. We thank you for sharing all this information with us. And maybe next time we can get your wife on here and maybe talk about the diamond side of it, because we don't want to overlook that also, because that, I'm sure, is another source of investing and holding.
Mm,
And there's some there's some good stories behind that, other than just the bling bling that we're going to see on our fingers and our ears. But we'll
yes.
leave that for the next time. But in parting, as always, we always have to have a word of the day. So, Mr. Smith, what you got for us today?
Well, here's the quote of the day. God never gives you a dream that matches your budget. He's not
Mm,
checking your bank account. He's checking your faith account.
There you go.
I
There's
like it.
another good one. So, like we always say on the Crotchety Old Men, if you didn't know,
Now you
now
know.
you know.
Now
Take
you
care.
know. I love
See you next time.
Peace.
This is Dr. Paul Clemens with the Crotchety Old Men podcast. If you're interested in financial tools to build wealth, and you're interested in ways to maximize your health through holistic alternatives, then you are just the audience that we're looking for. Tune in each week, every Thursday, to the Crotchety Old Men podcast, where George Crumley, Gary Smith, and I offer you in-depth discussions on health and wealth. Subscribe to the Crotchety Old Men podcast on Google, Spotify, Apple, iHeartRadio, or wherever you get your favorite podcast.